So here to tell us why we may be seeing sustained employment gains soon is Brian Wesbury. He's chief economist at First Trust Portfolios and one of the most accurate labor economists that we like to have on this program. Brian, you are coming up with this. David Greenlaw coming up with this figure. Bob Dahl yesterday on this program. This whisper magic number, where's it coming from?
Right. Yeah. Margaret, great to be with you. And, you know, where it's coming from is pretty simple. Last month in the payroll survey, we lost 36,000 jobs. Most of us economists believe if we didn't have those snowstorms, we would have had gains of somewhere around 100,000 jobs for the month. So all that means is that we've shifted those jobs into the month of March. Then you add the normal job growth, which I think is now beginning to kick in, plus census hiring, and you can get it easily, I think, a 300,000 gain for the month of March. Remember, we'll get that reported early in April.
But then, you know, you look around the different industries. My industry, media, still cutting jobs. I mean, we heard from Chevron, they're cutting jobs just this week. So how are you betting on job growth when we're still seeing the bodies being counted?
Sure. You know, you've hit right on the nail right on the head, and we are in a transformative period of time. There's lots of areas that are seeing productivity growth and issues. You know, for example, media, the whole internet issue is affecting media, both print and on air, and internet companies are actually hiring people. So we're seeing a real shift in where the hiring is occurring. It's happening in services sector, manufacturing. The last 2 months has been up. I think we're going to see a better gain there. And construction, I think, is about to begin to turn the corner. So you know, net, there are clearly industries that are losing jobs, but there are others that are gaining jobs.
You know, some people would say we're still, what, 12 million jobs short of full employment. Say we need innovation to really create these jobs. If you're talking about, you know, industries being transformed, who are the industries that are going to transform us in adding jobs?
Sure. You know, you
Beyond
never
manufacturing.
know.
I mean, are you betting on manufacturing as the future of the U.S. economy?
Oh, no, absolutely not. I remind people, let's go back 100 years, obviously in our mind's eye. And, you know, all those people that were losing their jobs on the farms were asking the same questions. Where are these jobs going to come from? Now, with history and as hindsight, we can say, oh, they were in manufacturing. But today it's going to be services. It's going to be healthcare. It's going to be technology. I wish I knew the million-dollar question. What's the new thing? I don't. We never do, really. But it tends to come about. And so I think we're going to see job gains this year. The unemployment rate's going to go down. I don't expect, by the way, it to go back to 4%. I think we're going to be stuck in the 7% range for some time. But that really doesn't have anything to do with new industries. It really, government's just too big.
Yeah, well, you're not the only one to be saying that right now. Let me ask you today about the trade deficit figures. Unexpectedly narrowed in January. We're looking at demand for oil and autos dropping off there. But you're finding reasons to be happy.
Sure. You know, if you look at the trade numbers today, we saw imports decline and exports decline. But, you know, in typical years, there's always going to be 3 or 4 months where you see the volume of trade shrink. You know, I don't know whether it's seasonal adjustments or just a kind of a fluky thing about ports being open. Who knows? Retail sales fall 3 or 4 months out of every year, even in good years. And so I don't look at this as some kind of new trend developing. And when I look at the trade deficit today, it was much smaller, 37 billion versus an expectation of about 40 billion. That means GDP is going to be better in the first quarter than we thought.
You're looking for a 4% growth this year, you said.
Yeah, 4 to 4.5. I think we're going to see real GDP at 4 to 4.5%.
All right. Well, we'll have you back on.